All right, beautiful. Welcome. It is President's Day, February 19th, 2024. Yeah, there's no tan, Carl. It was a active vacation, to say the least, there. So uh, it was all good. Sometimes it's good just to get away and do nothing as well as lay out and get a tan. And in 69 to 72 degree weather in Florida, it's a little more difficult to get a tan. So anyway, there's my excuse for that. Anyway, let's get jumping. And what I covered yesterday, I'm going to share Discord here for just a moment. And I do place some charts periodically here, usually on Sundays, but I'll do them other times as I go through some different things to trade. I did do some reviewing of copper, some of my charts, and my gold, oil. Those were posted, as well as some trade ideas. So if you didn't see these, you can certainly take a look and follow along. But yesterday I posted a potential copper trade, a potential oil trade in here as well. And I think there's also a gold trade down here. All right, so 3 different trades. I'll probably look to get some version of those on today. And let's take a look why. But I just want to run through my account really quickly so you can get an idea. But I wanted to make sure that you knew that, A, I do share some charts. I do share some potential trades down in here before I actually place live ones up here as well in the Discord. Just something else for you to take a look at as we go through, letting a couple more people in. And let me go ahead and share my screen. So what I want to do, you know what, let's go first through the trade tracker. I did catch everything up from last week, so I was on a bit of a vacation. Decided to just get away, which is nice when you are your own boss. It's also nice when you've got trades that don't have to be actively managed. I think this is really a benefit to trading. It's great when your account gets larger that you have that opportunity to potentially trade for a living, or at least trade as one of your income streams. I am a firm believer in multiple income streams, and trading is just one of them. So I think you shouldn't rely on just one income stream. You should have multiples. But I do love the fact that I am also my own boss on a couple other income streams. So you can do what you want. But I decided just to get away for a week, or at least 5 days or so, and just do something different. And I decided that my wife and I were just going to take a trip to Disney without the kids. It's been a decade or more since we took kids to Disney, but interesting to do it as an adult. Very different experience. Fun, but not as relaxing as I anticipated, because you're still waiting in line and running around the parks. But anyway, I digress. Let's just jump into this. So we had a good week overall. We still closed over $2,000 in realized profits for the week, considering we were actively not paying attention to hardly anything that was going on. I want to touch base on that a bit today, as well as to, and I did post something in the Discord on how I trade on vacation. And you can set up everything. You can try to group them on your phone and look at all of that stuff. I'm really looking at overall portfolio as we go through the week. I have a good sense, and I would believe that you do too. If you've got a trade tracker and you're paying attention to what you're doing, you have a sense as to where your trades are. If you're nervous about something and you're heading on vacation, well, then I think you should take it off, win or loss. Okay. So if if I'm heading to Europe for a week or 2 weeks or something like that, I did that about a year ago, and you've got stuff that's on the edge and you can't pay attention, then you just take it off, win or lose. You shut things down a bit and it's all good. Yeah, you can make it back up. And I start to slow my trading down about a week ahead of time. This one was a little bit more sporadic, or spur of the moment, jumping into a vacation last week. I really hadn't thought it through much in advance. But normally I would wind down my trades slightly before you leave. And I'll touch base on it, but really, I'm still overall, I am a portfolio manager. And that's the way I look at things, I'm a portfolio manager. I'm not necessarily a trade manager. I'm not as worried about individual positions and sticking exactly to what the plan's doing. I'm overall looking at my particular portfolio, and as long as the portfolio seems to be doing well, I don't feel like I have to go in and, oh, something's at 95%, I got to close it. If it's at 95, great. If it's at 94 or 97, I don't care. Okay, I want to try to, stick to my plan as closely as possible, but not at all costs. I mean, I can certainly let something go a little bit longer if need be. So overall for the week, and I think some of these numbers are a little screwy because I don't really trust Tasty Trade on the phone to give me accurate net lick and deltas and everything else, and buying power seems funky on my phone. It's not the same as on the desktop app. But I just screenshot at the end of the day. It takes me 2 seconds to screenshot so that I can then fill this in at a later time. But we did end the week up at a new all-time high, which is great. We're up over 3% for the month in net lick already, and we're only 16 days in, halfway through the month. We're up about 1.6% unrealized. We didn't close a lot last week, being on vacation. I don't know if there's anything we need to close right now. And the only things that really came off was a bunch of put debit spreads that expired, and I believe a strangle. We'll touch base on that. Year to date, we're up over 8%. On the net lick, we're up over 7% unrealized, so we're doing very, very well. Being that 3% a month is my goal, and we're not even through month number 2, and we're up 7 to 8%. That's where we should be in March, and we're already there in the beginning of February, first half of February. So pretty happy with where things are. This was an old number. I don't even know where its buy is. This is how much I care about the markets and where things are. So we're up 5.68%. Not much different. Okay. On the SPY, so we're doing a pretty good job against the markets as well. All right, and I just want to start off here. This is where everything starts, and I'm trading. Do I have BP available? Well, yeah, I'm sitting at 41% on my BP. That's pretty good. Pretty happy where that is, which means I have opportunities to add more. However, I do believe we're overbought. We'll touch base on that. I'm going to try to go as quickly as I can through this. If you do have questions, I will keep chat open on here, and we'll try to monitor everything that is going on. If you do have questions, certainly feel free to ask. I will do my best to answer them all. But I do have BP available. My theta is decent. It's at 0.2, which is less than I want. In a low vol environment, I think anywhere from 0.2 to 0.3 is totally fine. I think trying to get to 0.4 in a low vol environment is very difficult and potentially a little reckless, but I think being at 0.2 to 0.3 in a low vol environment, totally fine. I'm happy with where we are. But it's always good to get more theta on, and I'm less concerned about delta and theta, even though I love my numbers here, than I am with BP usage. BP drives everything that I do. If there's BP available, I'm going to look to put on a trade, potentially, no matter where my theta is. Just because my theta is low doesn't mean I'm putting a trade on if BP doesn't allow it. So BP is number one. It's the largest overriding thing that we're going to look at of the 3 keys here, which to me is delta, theta, and BP. Outside of those things, I'm not really worried about many of the other Greeks. I'm not worried about Vega. We can talk a little bit about that. I know Vega is the big discussion everywhere with it. I'll tell you a little bit more why that may be. Doesn't mean ignore it, but I pretty much do. But we'll talk a little bit more about how I'm just running this particular portfolio. And I'm happy that I've got low BP, which gives me an opportunity. Obviously, I can increase my theta. My delta is pretty delta neutral to slightly delta negative. I love the fact that I'm slightly delta negative in this account. It's actually a little bit lower right now. During the day today, we're at 35 negative deltas, which means if the market's dropping at all, I'm probably in good shape. Oh. Trying to mute everybody here again. So if the market's dropping at all, that's a good for me. But because I have decent theta, I'm making money no matter what the market's doing each particular day. and I have buying power and dry powder to place some trades. And we are sitting at new all-time highs, as I mentioned. Looking at my strategies, everything's pretty well going according to plan. You would expect that the long-term 112s will be up. Now, last month, I didn't have as much of an income generated on 112s because in December, I took, I think, 3 off as opposed to 2 here. So I only covered half of that here, but we had a monstrous January at $21,000. And a lot of that was helped with other strangles, oil strangles, gold strangles on other futures. We took in $11,000 on 112 trades on others. Other underlyings, so oil, gold, and a couple others, I believe copper. Most of the FB 112 losses here was just to put debit spreads expiring because I'd already taken off the naked puts in December. A little bit of money on ratio spreads, a little bit of money in January on zero DTE. Zero DTE, I did give up a little bit this month. Haven't traded it much because I've just been busy and not have a chance to really get into it. Maybe tomorrow. We'll see what the market is. I'm not religious about it. I have a plan. If it fits my plan, I'll put some trades on. I don't have to trade every day. I don't want to quit and give up for lengthy periods of time because I think the more trades you put on with a good strategy, the better your returns are going to be. I just haven't had a chance to do it. And then hedging's cost me a little bit. Otherwise, we're off to a pretty good month. So far, we're up $6,000, most of that being generated right now by strangle trades and some 112s on futures. All right, so there's where we are. And I want to touch base on the strategy builder piece down here because I think it folds into what we'll look at today. Good question in the Discord today about my allocation. Well, I did recently change in January, beginning of the year, my portfolio allocation on 112s is up to 60% of the total BP, which would be 30% of my account on long-term 112s. The numbers here are based upon today's most recent net lick or the most recent closing net lick. And then these numbers here are derived from this little chart down here that gives me a sense of what my typical credit and buying power are on average. Now they can be off a little bit, but it gives me a sense of what those are, how many days in trade typically a trade would be on, so I can figure out how many units a month I want to have on. And someone said, well, you know, if at 7 units a month, I only have 13 units running right now. That is correct. And the reason for that was, as I mentioned in the Discord, was I just changed this in January, which means I've only been able to put on 3 trades since January 1st with a newer BP allocation, and now it's at 7%. And how am I going to do that? I'll probably put on a 3 contract, one long-term 112, and then the next one will be a 4 contract 112. Then I'll put on a 3 and then a 4, and eventually this will get to 8, and then I'll just do 4s and as it scales up. So that's how I'm working that. We'll take a look at ES 112s, only doing 3 contracts on just ES. And then there's other oil 112s. I can do up to 3 contracts on that, which I have more than that on. I can do about 5 contracts worth of futures strangles. I'm taking some averages here of what these would look like. And then I can give myself a little bit of money to trade some spec trades, which I have a handful of spec trades on. Raj, on IBKR, I don't know where you find your portfolio delta. I'm pretty sure that's in the Discord. Just do a quick search on that. Go to the IBKR chat area. In Discord, there's a bunch of stuff down in here on interactive brokers. And then you can probably ask that question down in the general interactive brokers discussion. But since I'm not on IB, I can't really help you on finding that particular one there. But I don't know if it's complex or not, but it gives you a sense of what we're doing. All right. Anyway, so this tells me where I should be if I'm looking at my overall open positions. And I keep mine a bit organized down here. My 112s are at the bottom. So here's my long-term 112s. There's 1, 2, 3, 4, 5 currently on. 2 of, and I got another one that's going to be put on in the next day or so. We'll wait till the market's open tomorrow or Wednesday. Wednesday, technically, the 120 DTE. So that's the date that I would be putting on more long-term 112 trades. And for me, the next one would be to scale up to 4 contracts. So you can see here, back here, these were all at 2 contracts. Then I moved to 3. Now I'll be moving to 3 and then 4, 3 and then 4 until I hit 8. So I'm slowly scaling up as my account grows in size. Of these 5 up here, these are full 112s. And then these 2 here, the only things remaining are the long puts of the PDS. Everything else has been closed. The naked puts, the short puts of the PDS, everything's been closed except for the long puts, giving me 2 out of the money hedges that are probably not super helpful, but they're not, if there's a black swan event, they'll certainly be more helpful than something at, 1 or 2 delta. However, these things are 10% out of the money already. So we would have to have a significant pullback for these things to even wake up and do anything for you. But nonetheless, they do give you a little bit of protection. I've got 3 strangles working right now. In here, we've got gold, we've got 2 on bonds, we've got 1 on copper. So these strangles are all currently working. I'm probably going to get a strangle trade on today because of the buying power. 112, so I've got 1. We've got 2 in oil. We've got 1 in bond. Oh, I'm sorry, 3 in oil. So there's 3 112s in oil right now. So I like where we are on oil. We've got, and one of them we've already rolled up the put debit spread short strike. We've already rolled it up half the distance. So we've already got that on. And then we've got 1 in bonds and 1 in ES. Okay. And then there's just the remaining piece of an HG 112, which is just the put debit spread. The naked puts have already come off on this particular one. So we're in good shape. That's plenty of 112s right now. And then we do have a handful of spec trades on. You can see there are 2 hedges in here. There's a BA 112. There's 3 of those. There's a 1121 trade that I was playing around with. A 2112 strangle on gold because I just can't get gold to work on 112s correctly. And on and on and on here. So we're in good shape. I've also got 2 calls here. We'll take a look at today. So we put these 2 calls on at the same times as the April 19th and April 30th long-term 112s. So these 2 also have calls on them as well. And you can see when we look at the calls, I ended up putting 6 on here and 4 on here. Why? Because I had 4 naked puts here. So I put 4 calls on, and then I had 6 naked puts here, and I put 6 naked calls on as well. So there you go. And that's what we're looking at. So we're in good shape. Overall, we closed out some of these put debit spreads. So you can see a little bit of these losses from last week were the 3 of these were just on the put debit spreads alone, just coming off. We've already closed the naked puts on those 4 winners. So of the last, I don't know, 4 of the last 6 trades were put debit spreads closing. And then our last 2 winning trades was a naked puts on a 112 and this was a full 112 that came off, by the way. And again, this is why I didn't set any kind of a on this 112. It's a standard 112 that was at 56 days when I put it on. I didn't set we were so far above these numbers heading into vacation that why bother taking something that's going to expire in 10 days off? Why close the naked puts I didn't need the buying power. I was going on vacation, so I wasn't going to be trading anything. I'm still under buying power. So why close the naked puts and pay money to close the naked puts, or pay money to close the short puts of the put debit spread when I just let the whole thing expire for 100% profit. These, this 4640 long put that was going to expire in 5 or 6 or 7 days. Yeah, it would be a nice hedge while I was on vacation. You could have done it, but we were already 400 points above this. So why spend the money to close something with 10 days to go? I'll talk about it a little bit more. All right, so you get a chance to see what I'm doing. But when I'm on vacation, I'm not actively trading it that much. If something happens, it happens. But we'll deal with it if we need to. And let's look at the account. All right, so question in the black swan: are the long puts on a put debit spread really going to help us? Maybe. Okay. If the full put debit spread's on, not going to help you as much because obviously you've got the short puts and the long puts, but depending on the decay of the put debit spread and where you are, you're going to get a little bit of help. But in a black swan, having a PDS is not going to be a huge helper. Be a little bit, but having the long puts, potentially, if those puts are high enough up. So hopefully that answers that question. And if my account reaches 1.5 million, would I do a 10, 10, 20? Yeah, I think, but once you get to, I think that's a good size. I think a 10, 10, 20. Once I get closer to that size, I'll start to shift over potentially to SPX and portfolio margin on that. So when I get, in my other account, which is much larger, which is about 1.5, I am doing SPX versus ES. But it's totally up to you which one you want to do. ES is still going to give you much more leverage, but then you have a lot more risk and you have to hedge more. So to me, it's hedge less, take less risk, and spend less on hedges and less worrying about hedges, and just trade SPX when I get to a larger account. All right, we can talk about that more. Anyone wants to at some point do that. So let's take a quick look at the account. Oil, we've got a 112 on. This thing is way above. We're not at 95%. I could close it, but I will wait. I'm going to get more than 5 cents. Now maybe I can get it closer for 4 cents or something. Not going to do anything there. We've our other two 112s here. We've got one that we've already adjusted in here. Nothing to do with these, and nothing to do down here on this 112. So 3 112s in oil, nothing to do. We've got the 2 long-term 112 long puts, but again, these are at 41.50 and 4,000. And the question again is, do these long puts help you a whole lot in a black swan? Again, I'm only entertaining the word black swan because it's not my thing, but everybody loves to talk about it, so we can talk about it. But here's where we are, way up here. Okay, the market has to go all the way down here. Now, yes, volatility can expand, and maybe you'll start to realize some profits a little bit earlier here, but you're talking, we don't start making money until about 4,000. So right now, the market has to drop 1,025% for this thing to even kick in. Okay, I don't even know, you'd have to drop 25% quickly and have a giant vol spike for this thing to really even kick in. I don't know. It's not my thing. And I'm not poo-pooing it. So again, everybody don't get all too excited on me here. All right, but we're down here at 0 delta on these long puts. They're not helping me. And even something that's around 4,300 or 1 delta or something like that, is pretty far out. I'm okay. I would just assume take assignment at 4,000 than anything else here. But you certainly have these on. They do provide some negative. I mean, I'm only getting 2 and 11. So these 2 long puts are only helping my account by 13 delta, lowering my account 13 delta. It's not a lot. But again, it's a nice thing to have on. I think it makes people feel better, makes me feel better. Hey, if the world does end, I know these things might come alive and do something. Here's another 112, just in ES. This is a standard 112. Now, this is 11 days. Technically, I could take off these 45-25 puts. Now, again, the market is 500 points away from this. This is a 10% drop. I'm not saying the market can't drop 10% in 11 days, but on these kind of on the 112s versus the long-term 112s, with 11 days to go, this was like my vacation type of trade. I saw no reason to take these off and just leave this thing on. Now, this is much higher than these 4,000s. That's not bad. We'll consider it. I don't know that I want to spend $2 to close, a couple $100 to close these right now. Let's see what the market does. But if you look at the market profile, you can use mine, you can use Candy's, you can use whoever's. We both are saying, I think, the exact same thing, that market's in an uptrend. So the only thing you have to fear is fear itself. The only thing you have to fear is a black swan event. I'm not really worrying about a massive pullback. I think one's coming at some point. Do I think it's going to happen overnight? No, but I think the market should and could pull back. But right now, you're in a pretty good uptrend on there. And no matter who you're paying attention to on the market analysis, it's pretty much the same thing. All right, so here's another long-term 112. Nothing to do here. I'm not closing these at 90 or 80 or 50 or anything else. Right now, 38 days, not bad. We'll see. If the markets start to turn a bit ugly, then maybe I'll close these a tad early or something like that. But right now, nothing to do here. I'm not too worried. And if the market would crash overnight to 3,800, I'd be fine owning these March futures. Now, I don't have a lot of time left in them, but we still have a little bit of time left in the March futures, a couple of weeks. I would be fine owning it at 3,800 and potentially wheeling it or something along those lines. All right, there are 2 hedges on. Nothing going on there except just losing money, which is what hedges do, and protect you a little bit and then lose money as well. Long-term 112 here, nothing to do on this particular one. There's a BA 112 here, nothing to do on this one. This is a higher. When we put this BA 112 on, we put this up pretty high. 48.50. So this is decent in here. This can become a nice hedge if we start to pull back. I still have just these. Here's the 2 naked calls that we have on these trades right now. They're both up decently. They've given us some nice money. They're also giving me some significant negative delta. 225 points worth of negative delta here. That's nice. I like that. And they're giving me, not only am I reducing my overall portfolio delta, because again, I'm a portfolio manager, not a trade manager. Now, I will manage individual trades, but my first thing is I'm looking at my overall portfolio. So this is giving me nice negative delta. They're giving me a profit as well at the same time. Nothing to do. Here's a long-term 112, nothing to do there. Here's the little Frankenstein type of trade that we put on, based a little bit on Rob, well, based a lot on Rob's thing, but a little bit different on how he sets it up. But I just did a 556 here, or really a 655, if you would. There's nothing to do here. I just think it's interesting to watch it and see what happens on this particular trade. We're up here. If the market, rolls down, I like the curve. If we roll down a bit and this thing starts to expire, then we have some nice cushion, at least into the mid 4,000s somewhere along these lines. Now, this trade still has 71. There's a lot of time left on this trade. So if the market goes south quickly, it's not going to help as much. But as this thing starts to decay, if the market starts to edge down and we do get a decent pullback over the next month or two, then I think this trade might be able to pay off a little bit. This one is a more aggressive 1-1-2 trade that we had on here. This one we did a 2-2-4-2 or a 1-1-2-1, however you want to look at it. We have the extra naked puts down here. Again, just kind of keeping an eye on how all of these trades play out and help you as a whole. Okay. Again, we got to drop all the way down to 4,000 before I really start to worry about this particular trade. It's a nice buying power trade. We're up here. If we drop into, this is high. So it's, to me, the AT was the more aggressive trap. So you can see that these were placed closer to, I think, like 40 delta, something along those lines up at the top. That's all good. Another long-term 1-1-2 and another long-term 1-1-2. So we're pretty good shape. There, gold, we're just sitting on the remains of a 1-1-2 trade. This is the put debit spread. 14 days to go. If the market happens, oh no, I'm sorry, this is not, that's not put debit spread. This is a covered strangle. We're sitting on here. We're up 40 whole dollars on this thing. Just letting this thing work its way out. At the most, this thing could be worth $600 if we stay above here. And this trade's been on for 18 days. So we did this as a roughly a 30-day covered strangle, where the 1995 naked put represents owning the stock and selling an at-the-money call. And then this is the short put that goes along with the short call and the stock. So technically this is a covered strangle right now, the way it's configured, and we'll just let this thing continue to work its way out. It's a nice little spec trade. We'll see how it works out. When I put this trade on, just to give you a sense on this trade, it used up about $11,000 in buying power. So potentially I can make $630 on $11,000, which is a lot, close to a 6% in 30 days. So I like this trade. If we would get assigned, we would start to write more covered strangles on this particular trade. A little different than what Joseph's doing. And this is one we've done in the past. We were doing these on ES last year. I still think it's a good trade. I just wanted to do it on gold here because I was a bit more bullish on gold when I put this on. Gold's been a little bit more bearish more recently, but I think gold's just a sideways mover for now. It could drop. We'll see. But I think overall, I like the direction of gold. All right. We've got a 2-1-1-2 trade on in gold. This happens to be the way this one was done was a call. So 2 calls, 2 puts, and then a PDS in the middle here. And again, I have to make funky stuff happen in gold because a 1-1-2 just doesn't set up right in gold. So you have to do something to either juice the income or reduce the buying power. So putting on the extra calls was helpful here to get me more income on this trade. So it allowed me to do something a little bit different. Now, I'm not managing it really much different as opposed to having a 1-1-2 with these naked puts. If these naked puts here hit about 90 or 75% or so, we'll look to take these off. I think my rule of thumb typically is 50 cents or 75% return. So if these hit that, I will take these off. I'll just be left with the standard 1-1-2, which I will manage the 1-1-2 the way I would normally manage standard 1-1-2. And then there's a strangle on gold here. It's been 10 days. We're up 13%. I like gold. Here we've got copper trades on. We've got just a put debit spread remaining here. It's down because it's a put debit spread. Nothing I'm going to do on this one. It's only got 7 days left in its life before it's dead. And then I got a strangle here that's getting very close to 50%. Winner in 34 days. So hopefully this one will come off shortly. We may do something more there. I've got a BA112 in NASDAQ, and I'm just waiting to see if we get any kind of a pullback here. We've had plenty of time to see if we get into this trap at all. And then on bonds, we're sitting on a standard 112, and we're sitting on 2 strangles. This first strangle here is up 30% in 24 days, doing fine. This strangle's down fractionally here, down about $1,700 in 18 days. I'm not going to do much of anything with these. They're sitting in pretty good shape. So nothing to do on bonds. And then we have our normal bill usage down here, which is in good shape. No sense changing the capital required because we're pretty close to 10%. We're at 428,000. So I could potentially add another $1,000 in bill. I mean, I just don't see a reason to do it right now. We'll see what it looks like after the first of the month next month. All right. Anyway, this is where we are. So let's take a quick look at getting some trades on. And we talked about a few of them, but let me re-screen share and let's take a look at charts and see what we want to do here. All right, so just my portfolio or market analysis here, when I'm looking at ES, obviously you're in an uptrend, a pretty strong uptrend, a daily and weekly on the uptrends, nice, higher highs, higher lows, higher highs, higher lows, and mostly just higher highs and no higher lows on the weekly. However, the momentum is running out a bit on ES on the daily. Still in an uptrend. You're still stacked. You got the 200, the 50, the 21 in green, and the 9 in purple here. And a bit of a bearish PSAR signal, which is interesting. And we're just sideways trading for about a week plus now on this. We'll see what happens when the markets open tomorrow. But MACD is heading lower. RSI has been trending lower, and the squeeze momentum is running out. Okay, so you had a nice squeeze, launched itself, and then the momentum's running out. So daily, I think we're starting to run out of momentum. I'm not saying the world's crashing. Certainly back to the 21 and maybe back to the 50 would be really, really nice. If you look at the weekly here, this squeeze is super long. It's overdone. Not tipping over yet, but we'll keep an eye on it. But we did touch the overbought on the RSI and maybe starting to head lower, and we're heading lower on MACD. So everything here is telling me that, and there's a little divergence in the RSI on this daily as well. So you can see that RSI has been heading lower while it hit new highs here. Okay, not the same as the highs back here, but as we were close to the highs here, we were heading lower. Not a huge divergence thing, nothing I would get too excited about, but everything to me tells me I think we're running out of a bit of steam on ES, which could be really good for some 112s. I'm hoping that we have a good sell-off tomorrow and Wednesday before I put some new long-term 112s on. That would be really nice to jack up a little bit of juice in volatility. You got VIX up fractionally as well here. I don't know. Is volatility starting to wake up? Maybe. It's not looking like fantastic increase in volatility, but a big spike last Wednesday, if you remember that, and then settled back down here. Maybe we start to get a little bit of a volatility move up, which would be really great for premium selling. Doesn't change anything that I'm doing. All that volatility does is give us more premium or allow us to get slightly further away for the same amount of premium. So it's really the only two things that volatility does. Don't really pay much attention to it, but it gives us a little bit more juice in a particular trade. If we're looking at the weekly here on the NASDAQ, moving up, but also running out of steam on the daily, maybe running out of steam on the weekly. We can certainly hit new highs. We pulled back to the 21, did not hit, aren't making newer highs yet. We'll see when the markets open tomorrow and we have Apple and Microsoft and everybody else trading. We'll see what happens with those. If we take a quick look at oil, So I want to put some trades on. So quickly, let's just pick up the pace here. I like oil. Everyone knows I like oil. Oil's been in an overall downtrend for a while, but more recently, this weekly uptrend is in place. So we got a nice weekly uptrend. You can see, higher high, higher low, higher high, higher low, and not a new higher high yet, but it's been in a nice uptrend, and we're getting close to a new higher high. The MACD, RSI, and the squeeze are all reversing and heading their way higher on the weekly. I think there's good weekly momentum on this thing. And if we take a look at the daily, MACD, RSI, all heading higher, squeeze in a squeeze with some upward momentum as well. You're the 9 above the 21, above the 50, just below and sitting right at the 200. A lot of convergence here on the moving averages. I think if this thing pops over 78, it could really get moving up into the low 80s here soon. So I do like it, and I am bullish on oil. A bullish trade for me on oil would be a 112. We already have a couple, but we'll take a look at maybe a 112 on oil. Let's take a look at gold. I hope this is making sense for what I'm doing to you guys get a sense of what I'm doing. Gold has been in I just think it's really more of a sideways trend. Overall, it's still in a decent weekly uptrend. Higher high, higher low, higher high, higher lows. So it's still in an uptrend, but you got a little bit of a bearish, more recent weekly, but sideways. It's just not a super bearish trend for me. It's still an overall uptrend, in my opinion. And some sideways moving, and your moving averages are still stacked, even though the 9 is tipping over and the 21's flat. We'll see what happens in gold. MACD, RSI, and squeeze momentum are dropping. We'll see if that turns into anything else. And then over here on the daily, you've got MACD starting to head higher along with RSI, but the squeeze momentum is heading lower and in a squeeze. A lot of conflicting stuff on gold. But gold is at the exact same price that it was sitting at, really back here in, November, December of last year. We could even go all the way back here to November of last year, and we're sitting at the same price. So gold really has been in a tight range all the way back here. I think gold sets itself up for a nice strangle opportunity. And you're sitting very close to the 21. A little bit of bearish, a little bit of bullish, a little bit of sideways. It doesn't know which way it wants to go, so I think a strangle in gold looks good. On copper, it's just sideways action here. Even the MACD and RSI are dead middle of the road. They don't know what to do. Squeeze looks like it's doing nothing here. Up momentum, down momentum, up. It doesn't know what to do as it moves sideways. If we look at the daily for any more insights, you've got the MACD definitely moving higher, RSI moving higher, and the squeeze reversing its momentum from this downward momentum and starting to reverse up. So a little bit of a positive. Does that mean we're going to rock and roll? I don't know, but we're very close to the 2 to 21s, which give me a good strangle opportunity here. And I think you could also play a 112 in copper. So there's some opportunities there. And then the last one we'll look at is bonds. And if you're looking at bonds, the weekly momentum has been down. So we're in currently a downtrend on bonds, even though we had this nice up move. It's kind of tipped over. The weekly trend is down. PSAR is bearish, down RSI, tipping over. Okay, so bonds are heading lower. You can see on the daily here, the lower low, lower high, lower low, higher high, lower low again. But overall, this higher high was still not above this. So you're still in a bit of a downtrend here. Squeeze starting to pick up room to the downside. So I think bonds have more room to fall, and you're dropping below the 21. I just don't think bonds are going, all the way down. I think the Fed at some point is going to make at some point it's going to cut, but not anytime soon. I said it before. I think maybe 3 cuts this year. I was not a big fan that we were even going to cut in March, which now definitely seems off the table. Maybe we'll look at May or June, and then maybe something later in the year. Inflation's still cooking. Employment is still good. Economy is still rocking and rolling. I'll tell you what, I went to Disney World this week, and if you want to use an economic indicator, that's one of them. That place is packed. There's people spending ridiculous gobs of money. Disney is gouging the heck out of people, and they're buying every penny of it. Their airports packed. I love airlines right now. Airlines are packed. You're heading into spring break. You're going to be heading into the summer travel booking season. I like airlines. I'm not telling you what to buy or what to do, but I'd consider looking at some of these airlines like Love or American Airlines. These are all off of their lows, starting to get some momentum a bit, but Love looks better than some of the rest. And I really think, and I don't want to talk too much stocks because I won't trade them here, but if you look at Oxy, I mean, huge move obviously on Thursday and then continuation on Friday, but this looks really nice. So I think energy stocks, whether if it's Oxy, if it's Devon, I think those also look pretty good. I'm not trading them, but something you can take a look at here. And as the dollar continues to strengthen here, I don't really like Forex a whole lot until we see any kind of a change in the dollar. So I'm staying away from Forex. So we just lined up a handful of trades. Do I think NVIDIA earnings will affect bonds or commodities much? No, I don't. I don't really think so. I think it'll affect NVIDIA and the markets a tad, but I don't really see how it's going to really affect bonds or commodities. I think bonds have their own. I think bonds are dictating a lot of what's going on, and you've got bonds dropping right now. NVIDIA heading into these earnings. What are they on this week, right? Dang it, I had it. 221, so Wednesday, I think, right? So big run into earnings. You're going to have to smash earnings. Last time earnings were great and it sold off for 3 weeks and then it resumed. I think the same thing could happen here. I think you've had a giant run up into earnings. Unless earnings are ridiculously great, I would think you'll get a bit of a pullback on NVIDIA. So anyway, there's some opportunities and some things to look at there. All right, let's get back to trading. So we want to get some trades on, and we just identified a couple areas. And what I think I like to do is I'm looking at my overall capital allocations here, and I can see, in fact, this is a nice little chart. You can see of the buying power usage that I have, 26%. So only a quarter of my buying power is even in ES. Okay, so only a quarter. If the markets decide to go down heavily, only a quarter of my money is in the market itself, in ES, in the S&P. Okay, 18% in bonds, 17% in oil, 15% in gold, 2% in copper, and a little 3% here in NASDAQ. So I like this little allocation piece. I think it's kind of interesting to play with. But it gives me a sense of where's your money, where's your money, where's it going, where's it being allocated? And I like to spread it around. I'm not all about ES and long-term 112s. Okay. Yes, that's a big thing here in trading 112s, but not just on ES. Okay. You've got lots of different opportunities to play these. And, is oil going to be affected by the markets crashing? I'm sure everything will get affected to an extent. Okay. Will bonds? Will gold? Will copper? Okay. Copper is going to be more affected by China opening up more and more and more because they're the #1 user of copper, semiconductors. That's all going to be China-based. Okay. What button did I click to get the portfolio report in TT? Are you talking about the thing I just looked at? I went to capital required and I went to allocation. Is that what you're talking about? Okay. I don't know if you can. I don't know what's showing and what's not here. So on it, but yeah, so capital required, we'll do it. So I want to get some trades on. Let's see. So the first thing here is I'm a little lighter on gold than everything else. And one of the things on gold was I really liked the strangle opportunity. So I thought gold is a bit bearish, but I liked the setup on gold here. When I look at it, it's very close to its 21 moving averages. It's very sideways. So I like gold. I think we could try to do something on gold. The question is, are we going to run into the same setups as we already have on? Yeah, we're a little different. It's pretty close, but let's go to the normal setup here, which is the 7-6, and let's see what happens when we take a look at this thing. And the reason I'm going to take a look at the curve is I may make some changes to it because of the skew. So you can see that the skew to the upside now is quite a bit more on this particular trade. Now, in my portfolio allocator that I was looking at, for me, typically on gold, I take in about $1,000 on 3,500, and I'm making about 800 on 3,500 here, which is still fine. We're at 99 days, so $810 on 3,500 in buying power is 23% in roughly 3 months. I'm hoping this comes off in a month. That's more than plenty. So I want to give myself actually a little bit more room to the downside. So I'm gonna knock the downside down, maybe the upside down, just a fraction, just to equalize both trades, because I really don't know which way gold's going. I'm still making decent money. Let's pull in this to 2280. I'm still now making 780 on less buying power. Okay, so I'm not exactly at my 6. I'm at 7 delta here, and I'm around 6 delta here. I dropped it. In fact, I'm sharing a strike, which I really don't want to do. So I'll keep it at 1870. Right. So very similar strike there and not the same here. I don't love overlapping it, but this is that's a younger trade. So let's take a look at this. $800 on 3,100 is a pretty good trade. 800 on 3,175 is going to give me 25% return. At 50%, I'll take in 12% in a month or so. So I like this particular trade. Let's put this on, and we'll size it up a bit. Now I could size on a $420,000 account. I could size this thing up to essentially, 5 contracts at 39.50. I could probably size it up that way. I've already got several strangles on, and I've already got another one on in gold. So I'm going to size it down because I want to be respectful of my strategy builder that says about 6 contracts in future strangles, and I'm already over that. And because I already showed you earlier that I've already got strangles in gold, 2 strangles in bonds, and a strangle in H. I'm already over that, but I have plenty of buying power, and I want to add more gold trades on. So we're going to add this trade here. I'm okay. I don't need to take in more than $1,100-1,200 on this particular trade. So that's why I'm not sizing it up to the max size I could. It's because I already have trades on. I got to be respectful of my strategy builder here. And we're going to place this trade. Now it's gold, which means it'll take 19 days to fill, but we're going to leave this thing running for now. So I'll wait and see if that gets filled. But there's a trade on gold. I'm also a little lighter on oil than I'd like to be. And even though I have 112s already, and this one's only 10 days old, I'm still bullish on oil. Let's put something on in oil as well. I could put a strangle on in oil, but I'm bullish with where we are on oil. Oil is not anywhere near overbought. So I don't think, I'm not really in the camp that oil's going to tip over anytime soon. And I showed you that chart that it could be breaking out of a ascending triangle pretty soon with really strong momentum. We're heading into spring. We're heading into summer. We're not in the driving seasons yet. But let's see what happens on oil. So I still think a 1-1-2 trade here could be good, but can I put one on that's not conflicting? And probably not. We've already got most of this stuff covered in here. Something bullish that we can do in oil might be, I've already got these 1-1-2 trades on. So I don't think another 1-1-2 trade here is going to be helpful. So what else would I do to put some bullish trade that's theta decaying on in oil? So I think one of the things that you can do here would be, we could certainly take a look at going out only a month and putting on some kind of either a ratio spread or just selling naked puts in oil as well. If we wanted to put a ratio spread on, let's do something down in the 60s. Okay, so let's potentially put a ratio spread on in oil. Because I've already got 1-1-2s on, it's similar strikes. It doesn't really make sense to just keep piling on top of those. And I'm bullish on it. So here's a potential opportunity. The question is, can we make enough money on this particular trade? And right now, no, at 120 bucks and on 3,900 it's 3%. Well, you know what? 3% in 25 days is certainly doable. Here, could we move these up a bit? We can. So we go to maybe 68 here. Now we're making 160 bucks on $4,300, which is a little bit more like 3.7%. So this one's not bad. We can make the tent a little bit larger as well. So, and again, I'm just playing with sizing on this particular one. But here's a ratio spread on this. I'd like to make more than 160 bucks on this particular trade, maybe more like 500 bucks. We'll see. We might take it off at 50%. It's not going to be a big winning trade. Probably not great. I would have to take a lot more risk, I think, on this one. Do I mind owning oil up at 70, which is, again, I don't want to have dictate closer to like a 13. Actually, it's not terrible. Up in here, this one gives me a little bit more juice. We could reduce this thing. All right, so again, I'm playing. Hopefully this makes sense to you guys. I'm just playing with sizes to see, is this something that I like, or would I be better off just placing, a naked put only? Does this thing really do much of anything for me? We'll keep an eye on it. I don't know that I like anything on oil because I already have so many of these 1-1-2s on. So I think I might pass on oil for now. We're still waiting on gold to get filled. And it's actually over, the midpoint's higher than our limit, but market's going to close soon. Let's take one more look at copper and see if we can get a trade on copper. So right now, nothing for me there, but copper strangle might be a nice thing to get on. And we could take a look at copper. Go out to about 33 and 4.65. And the only thing I want to double check on copper. Bear with me. So on copper here, I like where we're sitting from a strangle standpoint. We could move up, but I don't think we're moving up to this level. This is a pretty nice trade. It's pretty wide trade on copper. I think there's one other thing working. So there's another strangle that's at 66 days. So I think we could get a strangle on in copper here. This doesn't look too bad. I'm neutral to slightly bullish on copper, but it's just been in a range for quite a while. I think this is a good looking trade opportunity, and we'll size this one up a bit. We won't go to the full size because I don't need to. I already have strangles on. And let's see if we can get some fill on copper. Maybe, maybe not. Copper takes a while to fill as well. All right. Anything else on this particular account? So nothing to really deal with right now. I just want to get a couple trades on, show you how I just mess around with the different setups. I really would like to get something more in oil, but I've already got 3 112s working. I don't necessarily love a strangle here on oil. But you know what? It's only probabilities, right? If we would do a strangle on oil, 61 seems pretty far down. 98, it's from 78 to 98, it's 20 points. It's probably not bad either. Okay, so we could put a strangle on in oil. Pays pretty well. I mean, you're making 780 extrinsic or 780 profit on 2,400. That's, yeah, I'll post these trades in Discord if I get filled. So right now, what if we just went 60 and went up just a bit more? Okay, I'm taking a little bit less. Okay, but I'm still making $670 on 21.99. This is still a 30% trade, and I widened it a bit more, giving myself a little bit more room, all the way down to 60, all the way up to 100. I think that's not too shabby. Let's put something on with like 4 contracts. And we'll see what happens here. I'm not caving yet. All right, so we got 3 trades working right now. Okay, so we've got a gold trade, gold strangle, we've got a copper strangle, and we've got an oil strangle. Even though I'm a little bit bullish on oil, I feel that I widened out my my call strikes a bit, and I was actually able to go a little bit lower if we pull back on oil. So I went with a pretty wide lower delta strangle. So I feel that's not too bad. Gives us a pretty good amount of extra theta in this account with these 3 trades. And I will just be a little bit more heavy on strangles at this point in time. Other than that, I don't have a whole lot else to add into the main account. If we take a quick look at the small account, this account's a little bit of a challenge because of MES here, and I'm not taking as much risk in here as I could. I do have long-term 112 trades on. I could take off these naked puts here, so this can come off. Just make sure. Let me pull up that account on the trade tracker. I know, hopefully this is not boring you guys to death. But let's take a quick look at my open trades. And I've got a long-term 112 here in March. Okay, we did close. All right, so we did close the short put of the PDS already. I just wanted to make sure. And now we're at 96%, so we might as well close. Try for 50. It's MES, so who knows what's going to happen here. And so we're going to try for this one at 50. I don't know that's going to happen. Let's just do it because everybody wants a winner. All right. So everybody loves a winner. So we just closed an MES small account trade. This thing is definitely in the death valley of buying power at 21%. So we got to get some trades on in here. And What I've been trying to do is get more of the long-term 112s on by putting them on a little earlier in the cycle, and then closer to 21 days or a little less than 21, so I can get 2 in a cycle, because you don't have on MES, I don't have as many expirations. Now in March, we do. Okay, but not every expiration has a middle of the month, end of the month that's available. So in March we did, in April we did, in May, okay, right now we didn't have a second expiration in May, so I had to actually put on 2 at the same strike in May. So I had to put 2 on in May. This one was put on at 128 days, and then this one was put on closer to 104 days, I think, something like that, in order to get 2 tranches on, because you don't have enough strikes in May. But June, it's coming up. So let's take a look at June, and maybe we'll just put a standard trade on right now in June. Okay. So this will be a June trade. Okay. So here we go. We'd be putting this one on. We'll increase the contracts on it, but this is what we would be spending in the small account trade. All right, so that's the goal in this trade. Let's get this thing done. So we'll put on, and I am always sizing properly here. So 2 of these. And 4 of these. And so we'll let this thing work right now. We'll put these on now. We got to use up a little bit more BP. We are still very light on BP. There's not a lot you can do in here. We do have a strangle on ES running. That one's been on for 12 days. It's at 3%. I'd like that strangle. I could probably do something on oil or gold or something in here. Gold's hard to get filled on. Maybe even copper. We could try to put that same copper trade on in here, potentially. Okay. All right, if we did this in the small account, it's only using 1,000 buying power and makes us 500 and some bucks. That's actually not bad. If I look at the strategy builder here, we are able to put strangles on. I do have the buying power. It's a little bit larger, even at 1 contract here, but it's still fine with the buying power usage in a small account. So we're gonna put it on. We'll see if we get filled on this particular trade. Okay, so we'll see if we get filled on it up here. I'm not holding out hope, and the market's going to close in about 20 minutes. And I'm not willing to walk it down too much more. Maybe. Still not bad. I mean, all right. So I'm asking for a little bit less credit. Let's see if we get filled on that. And we have not been filled on these. Got to spend a little bit more. Not great on a day when there's not a whole lot of things going on, but I just want to get some things filled. All right, I'm not getting the credit I want, but it's okay. I'll do it anyway. Nothing there. Still haven't gotten filled on that, but we'll give it a few more minutes and we'll see. I think that was helpful, at least if it was helpful for me. I don't know if it was helpful for you guys a long time and here, but it gives you a sense of how I'm managing each of the accounts. I'm sticking to my strategy plans. I'm putting on trades. I'm trying to keep as much as I can with diversification here. We'll go down one tick. So I am going to get filled on this oil strangle. So we're in on an oil strangle here. I'm not going to group them, but I will put in a closing order, which is always a nice thing when you're on vacation. I don't have to watch anything, and I'll be on vacation again in a couple weeks. So I head back to my condo, but I will be trading from the computer and staying active there. But we'll put this oil one on, gold. Now, these are right where they should be. If they don't get filled, they don't get filled. I will open them tomorrow. So you get a sense of what they are. I'm going to look to put these on today. If I don't get filled today on light volume, markets are closing in a little bit. If I don't get filled, I don't get filled on them. But negative delta, because I do have short calls on ES that's providing a lot of negative delta. So these short calls, I have hedges on. So these two hedges are providing alone, just on these two trades, those are providing about 120 negative delta. I've got those long calls, these naked calls. These naked calls are providing negative 220. So right there is 360 negative delta on the account. So 360 negative deltas between just those. And then you can factor in these other long puts. They're not doing a whole lot of anything because they don't. But give me a little bit negative delta on it. And I have a decent amount of strangles on. So that's my portfolio delta, at least. When you're looking at ES delta, look at my overall ES and the overall deltas here. My ES deltas are -6 and -114. So my ES delta alone is 120 negative delta, portfolio deltas. Okay. So I'm negative delta on ES. I've got hedges on ES. I'm negative delta on ES. If the market starts to pull back, that should be pretty helpful for me. I like where we are. I was going to try to take a look at something here, but I love the fact that I could actually buy an ES future for a credit right now. That seems funky to me. And I was going to try to make a point on getting assigned, but I don't think that's going to be helpful today. Yeah, I think Tasty's wacky everywhere. All right, so there's the plan. We've updated the account. We've added some extra trades in the small account. We've added some extra trades here in the main portfolio. We've added more theta to the account so far on the day. We started the day, if you remember, we started with started with 946. So if you look up here, our theta is 1,033 now, and we started the day, we ended the day on Friday at 946. So we've added theta. We've added a little bit of BP. Our BP is still only right around 50%. On it. So we're at 47% without bill, 47%, 48% buying power. So we're still under 50%. We've added about 100 more points worth of theta. Our deltas are still negative and the market's overbought. I like where we are. I like our chances in here. And I believe we're pretty diversified for a bit. So I think that, I think this is a fun thing to look at here. I don't know if you guys see this or not. Can you see this piece? Okay, maybe I have to do it this way. Okay, but I kind of like looking at this a bit. For me, this is important. I am not all about ES, so you can see that I'm not exactly balanced, but I feel pretty good. This is a good diversification. Well, here's my bill is 41,233. That's my bill buying power, not my total bill. But if you remember, bill's 25% margin for me. So my total bill is $164,000 worth of bill using 41,000 in margin. Okay. So at $164,000 worth of bill, I'm making roughly $8,000 a year, or somewhere in the neighborhood of $600 a month on my bill distributions as well. And that $600 a month helps pay for hedges, although I'm more than paying for hedges, with other wins. So I don't mind that 60 DTE hedge that I have on. I don't have a black swan hedge on per se. And I'll do another video this week on it. And again, I'm not poo-pooing it. I think it's a good idea. I like the way I think Rob's doing stuff. And I'm totally fine with you guys being safe and hedging. It's all good. But I'm also okay with assignment. And I don't mind getting assigned 20% below here. Okay, so if the market craters, okay, I may not stop out because I have an option on stopping out. I can stop at a 2x loss on my naked. I can stop at a 1x loss on the trap, or I can take assignment. If we have a vol spike, I will more likely, if it's a vol spike and a sell-off, let's say it's not a 20% overnight sell-off, but let's say it's a 10% big, the market drops 500 to 600 points overnight, VIX spikes, and you're all in losses. But if I'm not, if I start to hit 2x, but most of it is volatility related, I will hold for assignment more than anything. I'm okay taking assignment at 20% down. And again, my reasoning is volatility will mean revert, but prices don't have to. Okay, but volatility is going to mean revert. So even if your volatility spikes to 30 and you take massive problems, you can mitigate some of that buying power damage. You can buy futures. Okay, you can do a lot of different things with that. So I could buy futures, free up buying power. It's all about keeping your buying power free, in my opinion, so that you can make the moves you need to. If I need to temporarily hedge my buying power by buying some futures contracts or selling or buying some long puts, yes, I'll just do that. And maybe I'll take a little loss on doing those, but I will wait out the volatility spike. Now, if the market itself goes down 20%, then I might be much more, considering of taking some assignment in ES. But I only have a handful of ES positions on, okay, because it's only a quarter of my account. Anyway, I hope that makes sense. Am I buying futures? I'm sorry, I would be buying a short future to free up my buying power. Okay, so I would be buying a short future. Okay, and for me, I think buying, it's around $12,000 per contract. I believe the last time I looked, I have 13 naked puts on right now. If I took assignment on all 13, it would cost me 156,000 in buying power, which I have more than that available. I have more than enough money available in my buying power to take assignment on every naked put that I have right now. So again, I'm not poo-pooing it. I think you should be safe, and I think you got to do exactly what is right for you. There's no right and wrong way of doing it. I do have some hedges on. I am letting the long puts run, and I'm diversifying my portfolio. I'm not against the black swan hedge or anything else like that. I think you should do whatever makes sense for you and hedge it. But to me, it's hedging my buying power is most important to me. I want to hedge my buying power so that I have room to make some decisions on what I want to do. And if it's a volatility spike, fine. Okay, I just need to weather the buying power spike and I'll look to take assignment. All right. I know we've been in this a long time. I appreciate it. You guys hanging out with me here today. We'll see you back in the regular chat. Everybody take care. Have a great rest of your day, and we'll release this video this afternoon. Take care. Bye-bye.